Good morning and welcome to T-Hub Capital, the Investors Lounge, the podcast where we explore financial market dynamics, emerging trends, and the insights that shape successful investments. Each week, we'll delve into the strategies and analyses that drive our investment decisions. You'll get an insider's perspective on the factors influencing markets and the potential winners and losers of tomorrow. Subscribe to the podcast to stay ahead of the curve and make informed investment choices. Enjoy listening.
Welcome to T-Hub Capital's The Investors Lounge weekly podcast. Today's date is the 7th of January. Let's dive into the week's top market news. European equities hit record highs as economic outlook strengthens. The Pan-European Stocks Europe 600 index surged to a new all-time high in local currency terms last week, concluding the period with a 1.26% gain. Buoyed by an increasingly favorable economic backdrop, the benchmark wrapped up 2025 with an annual price return of nearly 17%, marking its strongest yearly performance since 2021. This positive momentum was mirrored across major national exchanges, with Italy's FTSE/MIB leading the charge with a 1.72% climb, followed by France's CAC 40, which added 1.13%. Both Germany's DAX and the UK's FTSE 100 advanced by 0.82%, with the British Blue Chip Index briefly surpassing the historic 10,000-point threshold earlier in the week. On the macroeconomic front, inflationary pressures in Spain showed signs of easing in December, driven principally by falling fuel prices and slower cost increases in the leisure sector. The preliminary European Union harmonized annual inflation rate retreated to 3.0% from 3.2% the previous month. However, underlying price pressures persist, as the core measure, which excludes volatile fuel and food prices, remains steady at 2.6%. Meanwhile, labor market data from France presented a mixed picture. Registered unemployment in the mainland fell by 21,500 to 3.129 million in November, receding from October's 7-month peak. Yet the figure remains higher by 197,300 compared to the previous year. Elsewhere, the UK housing market demonstrated unexpected weakness as the nationwide Building Society's House Price Index declined by 0.4% sequentially in December, defying analyst expectations for a 0.1% rise. Turning to monetary policy, minutes from the Swedish central bank's recent meeting suggest a prolonged period of stability. Riksbank Governor Erik Thedéen signaled that the key interest rate is likely to remain unchanged at 1.75% through 2026, with policymakers forecasting no adjustments for the foreseeable future before a gradual increase is considered. Now our insight into alternative markets. Capital's silent shift. Why private equity is betting on Europe's robotic revolution. While headlines remain fixated on the clash between listed giants like Tesla and Chinese big tech, smart money flows are telling a very different story, operating far from the spotlight. The humanoid robotics sector is no longer confined to R&D labs. It is rapidly transforming into a strategic asset class for private equity and venture capital, with RBC Capital Markets estimating a potential value of $9 trillion by 2050. Institutional investor attention is shifting from Silicon Valley's public markets to the hidden gems of the private market, with a focus on China and, prospectively, Europe. True innovation in humanoid robotics is largely happening away from stock exchange listings. Many of the most promising players are non-listed, agile, and vertically integrated companies, representing the ideal target for private equity funds seeking high growth multiples before a potential exit or IPO. Current data highlights emblematic cases of this dynamic, such as Unitree, aiming for a pre-IPO valuation of $7 billion, or Ogibot, a startup that has already scaled production to 5,000 units without passing through public markets. Even Xpeng's robotics division, though linked to a listed group, operates with the rapid development logic typical of scale-ups. For private equity, the attraction lies in the opportunity to enter the capital structure during the industrial scale-up phase, financing the capex needed to drive unit costs below the critical $50,000 threshold. This is where value is created, transforming engineering excellence into concrete operational margins. In this global scenario, while the US and China lead in hardware and software, Europe is emerging as the most interesting integration and end market for the next 5 to 10 years. Investors are looking to the old continent for deep structural reasons. Europe is aging faster than other regions, making the humanoid robot not a technological whim, but a necessity to maintain manufacturing productivity. PE funds understand that European B2B demand will be rigid and consistent. Furthermore, while China assembles, Europe, particularly Italy and Germany, excels in precision mechatronics, sensors, and hydraulic and electric actuation. We expect a wave of mergers and acquisitions where funds will acquire specialized European SMEs to integrate them into the global supply chains of humanoid robots. Added to this is the regulatory advantage. Europe will define safety standards for human-machine interaction following the AI Act, and companies capable of navigating this landscape will hold a massive competitive advantage. However, the report from the Chinese National Development and Reform Commission already warns of a risk of a bubble and market overheating. For private equity, this means the phase of blind betting is over. Due diligence is shifting toward precise metrics, focusing on the real ability to produce with a cost of goods sold, COGS, below $30,000 40K, and the hardware's capacity to support new generations of embodied AI through proprietary architectures rather than generic solutions. The focus is on immediate applicability, not generalist robots, but machines ready for logistics, elderly care, or hazardous manufacturing. We are at the dawn of a new industrial investment cycle. For asset managers and private equity funds, humanoid robotics represents the natural evolution of Industry 4.0. While China pushes for mass volumes and the US for software, Europe is preparing to become the hub for high-quality integration. Those who allocate capital today in non-listed companies holding key patents or scalable production capacities will find themselves holding the industrial leaders of 2035 in their portfolios.
Thank you for listening to this episode of T-Hub Capital, the Investors Lounge podcast. I hope you found this content interesting and inspiring. If you enjoyed this episode, don't forget to subscribe to the podcast so you don't miss a single episode and share it with your friends and colleagues who might be interested. To learn more about T-Hub Capital and our activities, visit our website, hubcapital.com. You can also follow us on our LinkedIn page. See you soon. All the best from the T-Hub Capital team.